Rohr here with an early global view on Tuesday, December 2nd, 2014. It's currently 6:45 a.m. U.S. Central Time, and there's quite a bit of macro influence out of yesterday, and we will be getting to that shortly. And we must ask, what does all this mean to the markets? Well, of course, Friday finally saw on the week data the inability once again to get through the topping activity and the topping tendencies on the topping line on the weekly chart at 2070. And even though the market was above it at various points, going all the way back to the sharply higher gap opening a week ago Friday on the 21st, through last week, trading up above 2070 at certain points, but later on in the week, the anticipation of the weekly chart topping line moving up to 2075 is probably part of what restrained the market. And as we suspected, once it started to weaken, it broke the very aggressive upward channel that incorporates the big gap higher from back on the 21st. There was a gap higher from Thursday's close back at 2052. So even though you broke this very aggressive channel up here near the high and even, right around the previous highs at about 2072, and that led to a gap lower on Monday, the dilemma was that there was plenty of support below the market at about 2052, with a buffer even down to the previous false down break at 2046 the market never quite got to. So even though it closed below 2052 on Monday, this morning it's trading up 6 at 2057. And that just shows the ability of the mid to low 2050s to stabilize this market in the near term. And indeed, if the U.S. news is constructive at all today, we suspect there'll be some further anticipation that could drive it right back up to that 2070 to maybe even the topping line at 2075. If it should find an excuse to weaken, again, there's some further support about 2046. But the bigger recent congestion that we picked up on from midweek 2 weeks ago, right into the Fed release of its statement, and even the negative data on that Thursday morning, this was Wednesday, Thursday, it was down around 2040 to 36 on the recently generated congestion, and that would remain support on any further near-term break. And the important part of the market cleaning up today as well is the degree to which the market had the hourly MACD out below the lower runaway band for a while yesterday, but wasn't really quite following through. It left the door open for further failure with the weak close last night, but any strength today is likely to also defuse that indication of potential aggressive further downward momentum and leave the market in a more buoyant state, at least in the very near term. And that pretty much does it for the short-term view of the S&P 500.